Jeremy, thank you so much for coming on. I really appreciate it. I asked Jeremy to come on because I saw that videos were starting to come out that he was making some of the largest purchases that he's made in a very long time going into PayPal. Now, PayPal is a company that I cover a lot. Tell me, Jeremy, why do you like that stock so much?
Oh my goodness. Well, first off, thanks for having me, Tanner. It's exciting that, I know you've been taking YouTube serious, especially like kind of this past year. And, we lost a lot of stock market creators in the bear market last year, unfortunately. A lot stopped posting and whatnot. So I'm excited about you and kind of the future of your channel and whatnot and continue to build out the space. But yeah, so PayPal, I mean, right now, it's the stock I'm most excited about from kind of risk reward standpoint.
Mhm.
It, you know, and I've been buying it for a few months now, and I just want to continue to build this position, especially under $100 a share. But valuation is right off the bat is what comes to mind. I mean, you got a stock trading at a forward P. We're probably looking at a forward P of maybe 12ish right now,
Yeah.
and that's based upon analyst expectations. If you're a little more bullish, maybe we're at a 10, 11. Now, that's fine if we're talking about a stock that has no growth in the future or its best days are behind it or something like that. But when I think about PayPal, I'm still thinking about a company that I expect to grow revenues 10% a year plus for many years to go in the future outside of some sort of mega recession or something like that. So, when I look at it from that standpoint, I also like the diversification the business model has. We're talking about PayPal, we're talking about Venmo, and then Braintree, which is, just kind of there in the background that I think is extremely important and just something that I don't think a lot of people think about when they first think about kind of PayPal stock. So, and I look what they're doing on the innovation side, what they already have out in the market, and especially from kind of the Braintree side, being able to pay with a credit card, debit card, Apple Pay, Google Pay, PayPal, Venmo, all in one spot.
Yeah.
In this day and age, people want to pay with different stuff. So, and even listen to their latest management presentation that they did last month. I believe it was on June 8th they did that. I listened to that baby, and it's exciting all the innovation they got coming that we're not seeing right now, but they're working on behind the scenes. So, man, it's just it's a very compelling risk reward profile, and those are some of the most attractive in the market. So, yeah, very excited about PayPal.
Yeah, no, I like that you brought that up because no one really pays attention to Braintree because obviously you don't see it, right? And I find a lot of people value PayPal because they say, none of my friends use PayPal, no one uses these sorts of things, and then they go and make purchases either through Uber or TikTok, Messenger, whatever, and then you're actually making purchases through Braintree and you have no idea. Like,
100%. Yeah.
so I find it funny that that's the sort of way it works. Like that company, Braintree, is still growing at a compounded annual growth rate around 40% a year.
Yep.
Like it's insane, and no one's talking about it. And
Yeah. Yeah. And when you think about at the end of the day, the more payment options you give a business, if you run, especially if you run an online business, the more money you're going to make. At the end of the day, like certain people like to pay certain ways. Maybe it's PayPal, but we know if you have PayPal as an option, your conversions go up dramatically if
yeah,
you have PayPal as an option. So just having them, now you have Venmo, like especially for a lot of the younger generation, that's massive. And so I'm thinking about all the different ways they can connect on kind of the back end and innovation that will be coming that we don't even see today. And I just think that's very, very important. And even I mean, obviously this is kind of anecdotal, but when I talk to like, if you ever have to transfer money in kind of like my friend group and whatnot, I was an early adopter kind of in Apple Pay. And so I was
yeah,
like, and then I would ask people, hey, you want me Apple Pay? And they're like, what? I don't even have that. And I'm like, how do you not have it? You have an iPhone. And so there I really began to understand, and this is just in the past few years of like, wow, these folks have iPhones and MacBooks and all these things, and they don't even use Apple Pay, but yet they
right.
use PayPal, they use Venmo. And that's where I began to understand kind of like it's not just as commoditized of a business as I think some folks maybe think it is. So, anyways, that's it's a very attractive risk reward. And in terms of your past with how did PayPal really get on your radar, Tanner? And kind of what's your story there with the stock and kind of your beliefs and whatnot?
So I'm a fintech investor through and through, as well as e-commerce. Right,
Okay.
those are my two easiest ones because it's in my bracket. It's in my realm of understanding. I can understand things like whenever they say payment can or PayPal's complete payments bring in a 40% increased conversion rate. That that is not hard math for me to understand. There's not too far I have to go to actually sort of understand the benefits of that. I don't actually know how it fell into my radar. It fell into my radar very recently, however. So my average price target right now on the stock, I think, is like $63. And that's because I've been actually increasing my price. So I was
Yeah.
buying in at like, you know, upper $50 ranges, and then bought like my big bulk around $61 a share, and been slowly adding. See, me, I want to be buying this stock till $100 a share. I would consider
Mhm.
myself a growth investor through and through.
Yeah.
So I'm not going to be holding on to PayPal forever, but right now it's just a screaming buy, in my opinion, at least for the next 50% growth, from where it is. Um, I, I look at things like, whenever I'm looking at this company, there is a 78% institutional holding on this company. So smart money is loving this business. There's a 1% short on this company. So they're looking at the fundamentals. They see the earnings per share is still expected to grow, like you said, over 20% for the next, couple of quarters, while they actually acquire their own shares back. They're buying back $5 billion of shares this year. I mean, that's an extremely exciting business, regardless of the type of investor you are. You
Yeah.
know, look at the total addressable market, and understand that e-commerce is not going anywhere. It's growing like crazy, and PayPal does 25% of the overall share of sales. And digital wallets are expecting to grow in terms of the overall amount of payments through e-commerce. I mean, that seems like a no-brainer.
Yeah, and two of the big, I guess you can say, bear points around the stock, because I think we always got to look at it from all the different angles,
Yeah,
right? Two of the big bear points people make. The first one's competition, right? And I love to hear kind of your perspective, but my perspective on competition is they've been dealing with competition for a long time. Apple Pay's about close to a decade old now at this point in time. Google Pay's been around a long time.
yeah,
Uh, the Cash App's been around a long, long time now at this point in time. Anything else you want to throw out there as a competitor has been around a long, long time. Fed now, we'll see. I don't see that being a competitive threat, in my personal opinion, to PayPal. We'll see what happens there,
sure.
but just usually the private sector is going to beat the government at whatever, if there is any sort of competitive threat there. So the competition, and once again, I'd love to hear your perspective. I don't think is as big of a deal as people make it out to be. It's always going to be there. It always will be there. It's going to be a competitive space. And then the other big thing is who's the next CEO and CFO of the company.
Yeah,
And my belief is they'll either be able to promote somebody from internal that is going to be top notch, or they're going to be able to attract a ridiculous talent. Because my personal opinion is, if they're going to acquire somebody that's an external person and bring them in to be the big dog there, I think that person's going to have the ability to potentially make $1 billion of compensation over the next 5 to 7 years if they bring in a top. Because based upon the stock options, I believe they would likely get granted, and where I think the share price of the company's going, if they do a good job, I think they have the ability to make up to maybe $1 billion of compensation over a 5-year span. So there aren't many of those opportunities out there from almost any company that you could say, could I realistically make $500 million, $1 billion of compensation over the next 5 years? So that's going to attract some top tier talent. So we'll see where they go with that. But those are kind of the two main kind of bear cases I see out there. But I'd love to kind of hear your opinions and perspectives.
I think, yeah, those are the bear cases, right? Is that Apple and Google are making headways, and even Amazon Pay is actually growing their share of wallets pretty quickly as well. Um,
Shopify Pay also. Yeah,
yeah,
that's another
yeah,
one. Yeah.
and actually, just to know me a little bit better, I've been pretty public with the idea that Shopify is my biggest holding. Um,
Mm,
so
okay.
I what we'll get into as we talk about PayPal, SoFi, and Nubank in potentially in our members video is I like an exceptional business at a fair valuation.
Yeah.
So Shopify for me is just one of those businesses that I'm willing to pay a premium.
Yep.
But also, I've been a shareholder for years and years, so I'm very green on that position. But that being said, with PayPal, talking about the CEO, I'm really hoping that they get either some young blood in there, or potentially even what I've talked about on the channel a couple of times is John Kim. John Kim is their chief product officer right now. Very smart guy. And he's the one that's been really pushing for, I think, this spreadsheet or this slide that you were talking about, if I could share my screen here, that they're pushing out more innovations now than ever, right, through PayPal. And I think that this is the only way for PayPal to continue to keep their dominance, is if they continue to innovate on newer and newer products and stay top of mind whenever it comes to digital wallets, because I do think that that's where the people are going. And John Kim has been the largest sort of player whenever it comes to talking about buy now, pay later. That's been his big thing. And I think that's actually how we connected. Was you messaged me or commented under my buy now, pay later thing on Twitter. You're practically turning a payment processor right now into a credit company. And like I said, I'm a fan of SoFi. I'm okay with a nice credit company if you can manage the risks. And who has more transactional data than the company that has 400 million users? So
100%. Yeah, a lot of great points there. And obviously, they sold off the debt from the European side very recently.
Yeah.
And I love to hear your perspective. My perspective, I liked that. I understand it's not going to maybe help them make as much money as if they held all that, but I just kind of think of if they can, because that's I guess you can say one of the last kind of bear theses is like, oh, they got
Sure.
the buy now, pay later. What if these people don't pay? What type of hits are they going to have to take in terms of what that could hit their EPS and in cash outlays and things like that. But so I actually like that. I don't know if you like that or not, but I actually like kind of de-risking. I wouldn't mind if they did it on the US side as well.
There it is. Yeah, KKR is what we're talking about here. They actually purchased $44 billion worth of PayPal's receivables for buy now, pay later. Super exciting. I think what they actually netted was $1.8 billion for that transaction. Tell me if I'm wrong, Jeremy. One something billion dollars went to just buy back shares, and then the other 700 they're just sort of coasting on for future growth.
Yeah, I was going to say, I wasn't sure about the specific number. It was hard to find anything about the specific number in kind of the press release and whatnot, I noticed, which kind of was a little frustrating. I'm like, can you guys just put it there simply?
Yeah. But still, I mean, I personally think it's a good move, right? I think, I don't know the exact specifics of what they were supposed to net versus, the discount that they gave for selling all those receivables. And even the complexity is like, how do you sell a $44 billion portfolio that nets you a zero APR essentially? What they're actually getting is the, transactions for that actual amount over time. But it's just, yeah, it's interesting that they were able to do that. And like you said, they'll probably do a similar thing in America as well.
Yep. That's definitely my hope, personally, because, I think PayPal just thinks of it as just, we want to try to run as many transactions through our processes as possible and make it as easy for folks to do whatever they want to do, if that's buy now, pay later, as possible. And so, I don't think they really want to take on the risk like being a bank.
Mm-hmm.
That's kind of my opinion. And I also don't think they want to see themselves as a bank. And I don't think they really want the stock market, to look at PayPal and think it's a bank. They kind of really want to be seen as a fintech company. But if you start holding tons of debt and things like that, then people start assuming like, oh, you're just one big giant bank. So
yeah, you want them to be pretty asset light, right?
Yes, kind of like Shopify's done that recently.
Mm-hmm.
Obviously with the sales of Deliver and kind of the way they've gone back to old school Shopify, very asset light, and it seems like definitely PayPal wants to go that route as well, which I'm all for that.
Yeah.
I think you'll build a much more profitable organization over time, and you'll be able to move faster, in my personal opinion.
Exactly. That's what I think as well. Is like I do think, especially in this space, as it's actually, things are happening very quickly in the payment space, is that innovation and quick on your feet is seeming to be a big play. Because I just went over this on the live stream on one of my I do like a FinTech Frenzy live stream every day. And one of the things that we were covering was QED Investors, which is a big VC company that only invests in fintechs. and they were breaking down the total addressable market growth for all the different areas of neobanking, payments, lending, investments, all the different attributes of fintech. And they said payments till 2030 will still be the largest component of fintech by a long shot, still expected to 5x between now and 2030. Okay. And people think that the largest player in that space is going to die off between now and a 5x growing total addressable market.
Yeah.
What are we talking about? What are we talking about here? Like,
so yeah, you know what? That just led me down a thought process here. One of the other beautiful things about PayPal, right? Because going back to the competition thing, and could they be killed off and whatever? Payments is what PayPal's focused on. Like, this is their
yeah,
number one core mission. This is what they do. This is the get up and grind. How important is Apple Pay to Apple, right? Sure, it's important, but of their priorities, this is the 7th, 10th, 15th most important thing that Apple
yeah,
does.
yeah,
For Google, the 10th, 15th, 20th most important thing. So you look at all these different companies that are seen as competitors, and pretty much none of them, it's their core product other than Square with what they built with obviously Cash App and everything they do on the Square Reader side and things like that. So but yeah, so that's kind of my opinion. I just it's a real interesting risk reward. In my opinion, it's the most interesting risk reward, most attractive risk reward I've seen since Meta under 100 last year.
I love that you just said that. I've been
mm,
tagging this as a meta play for a long time. This does feel like meta back in October when it was like $80 a share,
yeah,
and people just thought it was a dying brand. Like, that was the
mhm.
whole sort of idea, was that this was just a like, no one uses Facebook. And then you start looking at the numbers, you're like, oh wait, 2.9 billion people use Facebook.
Yeah,
And
yeah. And
it's
the
a
other thing
similar
with
thing.
the other thing with Meta was at that time, they hadn't cut employees yet, so everybody was talking about, oh, look at how much they're spending in the metaverse, and there was also worries about the economy. There's a million things going on with Meta. For right now, with PayPal, it seems like their version of the metaverse is more, in terms of the worry side, is CEO. Who's the next CEO, CFO? Where's the future of this company going? And honestly, my opinion is, I think that's where a lot of big money's waiting for, is to really get clarity around that. I think once big money gets clarity around that, I think we can see this stock probably move up pretty quickly. I'm not going to play some 1 month out calls on this or something like that, but
Yeah.
I think whenever that comes, I think it's going to be massive for the stock price, because I think a lot of people are just waiting, and they're just like, and I will be honest, they're kind of dragging this on a little bit, but I think if hopefully they got something to say on this conference call coming up here. I don't know when PayPal reports, probably in a few weeks from now. But whenever they do the conference call, hopefully they got something. If they don't have the person, they at least are like, yeah, we're nailed it down to 2 or 3 people, or we're very close to making our decision.
Yeah.
Because I think this is just the biggest overhang on the stock is like, who's going to be leading this company, and are they going to be spending? Are they going to be spend, and profitability is going to take a hit? Or are they going to try to rein in spending? Like, I think that's what a lot of big money is trying to figure out. So.
And I think that the problem is, I loved Dan Schulman. Like, I think he revolutionized the company. He completely changed the way they worked, and so it's kind of sad to see him go. But I think he's being forced out. Just personally, I think that
Wow.
uh, he he made a lot of grandiose predictions during COVID, and then they didn't come true. And
Yeah.
so I think that was kind of his big blunder. But very similar to Shopify in that case too. Like Shopify thought that all this momentum in e-commerce was going to grow and then stay flat. But
Yep.
both companies were wrong in the idea that it actually started to fall as people went back to in-person shopping, like brick and mortar. But
Yeah.
um, so maybe I fell for that overall. But like,
Yeah.
who
Happened with
knows?
Amazon. Everybody pretty much e-com related, got a little too confident, obviously, in Rona, and all of them suffered immensely. I mean, Amazon was down about 50% last year, peak to
Yeah.
trough. PayPal 70, 80%. Shopify was 80%. So peak to trough. I mean, it was obviously vicious, but
Yeah.
now it definitely feels like the starting of the comeback for a lot of these stocks. And obviously Shopify, I think that bottomed out, I want to say at 25-ish. And, now we're pushing 60 plus. And obviously Amazon started to come back. PayPal's even started to come back, but I just think PayPal's probably the earliest kind of in that bunch. So,
Yeah, no, I don't know. I think it's so funny because like you said, I really wanted to talk on that whenever you originally said it, that the people in your friend group, in your sort of snack bracket, they don't want to use Cash App or Apple Pay or these sorts of things, because even like whenever you look at brands people trust, PayPal is the second most trusted brand, like practically worldwide. Like people
yeah.
really do trust PayPal.
Yep.
And especially, and I'm sure you've dealt with this too, like I'm just starting to talk with brands online and stuff like this for YouTube.
Mhm.
They all ask, do you have a PayPal? like
Yep.
that's the brand that they want to deal with,
Yep.
And even I don't know if you talk about this with your audience a lot, but they're the only foreign company that fully owns their entire payment process through China. That the CCP
Mhm.
does not own a percentage of the payment network that PayPal has in China. That
Oh,
does
that's an
not
interesting
exist
thought.
for any other company in the world. And there's only been some companies like Amex that have been able to get in there. But even then, CCP owns like 40% of their overall network.
Wow. Yeah,
So
that's an interesting thought. I like
the,
that.
the governments love PayPal. They're an extremely trusted brand. And as these companies grow, I do believe that there are going to be some company like let's say if central bank digital currencies come out in here in America or whatever, it's already been talked about for PayPal that they are going to be a front runner for that business.
Yep.
So I don't know. I also like placing a lot of my investments where governments are not too angry with the businesses, because that can be a faulty sort of place to bet against the U.S. governments.
Yeah, that's a good point. And you see even the growth over time of old companies like Visa and
Mhm.
MasterCard and American Express. And it's incredible the growth those companies still put up. It's incredible the stock price performance of those companies the last 10, 15, 20 years. And those are companies that are kind of slower moving companies too. You don't, when you think about Visa or MasterCard or even Amex, you don't think about them as innovation engines. Think about them just as traditional old companies, but yet, man, they just absolute profit machines,
Yeah.
cash flow machines. And so yeah, PayPal is going to become more and more, I think, like those over time, where they're going to still put up great, consistent growth. Now, if they continue to innovate, I think they can obviously move the ball faster than some of those old dog companies, the Visas, Mastercards, Amex, and whatnot. And if I recall, Schulman had a lot of experience at American Express before he came over to PayPal, if I recall. So
I don't have any. I don't remember that, but
yeah,
not saying you're wrong. I just can't remember.
yeah,
Um, but yeah, I'm also curious on your thought of like whenever we're talking about Braintree or Venmo, which are really the large growth factors for PayPal, at least in my opinion, they don't quite take the same take rate as branded checkout of PayPal. So what do you think about the margin compression at PayPal? Like whenever more people are just using Venmo in Braintree and then they sort of get a lesser payment from those. Like, is
yeah.
that a concern for you?
It's not. I understand some people look at it like that. The bottom line is, I like growth. I want growth in top line. I want growth in bottom line. If margins have to take a little bit of a hit uh, to put up that growth, because maybe more transactions are coming in one way or another, that's fine. Um, and I think PayPal has very tough products to compete with when we're speaking about those products there. I think that because the take rate's so low, I think that's really tough competition.
Yeah.
And you know what else is interesting? You spoke a little bit about the government. From what I'm hearing a little bit, at least in the U.S., is some politicians are not too happy with the amount of money companies like Visa and Mastercard are kind of making off all the little microtransactions going
Yeah.
through. So there could be some sort of compression for those companies over time. We'll see what happens there. But if I look at kind of what Venmo's doing, Braintree, man, it's hard to see those guys having to get hit at all because of how low kind of the take is there. So
Well,
My opinion is I just want to see revenue and bottom line be there. Margins, if they go up or down or whatever, it's not as important to me as long as the bottom line is going up over the next, several years and quite considerably.
yeah, and like and also it's not just a one-sided transaction play here either. They also deal with 35 plus million merchants. So they're kind of what they're trying to do is have like this closed loop system where, Braintree is working with the companies, allowing them to set up these businesses or payment complete or PayPal's complete payments, set up all these businesses on the merchant side, and then as payment options, they can place PayPal and Venmo as some of the highest options, which obviously have the highest chosen like selection from the user. So
Yep.
like I remember reading this article. I wish I had it in front of me. I wish I thought about this, but it was talking about the percentages in which people select their payment option depending on just how high they are. Like the payment hierarchy of whichever one is first, like it's something like 77% of people choose that one.
Yeah.
So whenever you own all the merchants and you own those things, you can select your own payment processor to be that payout solution.
Yeah. No, that's a great point. And it was interesting because I believe the gentleman you were speaking of that you want to take over the company as CEO, if I recall, he was on the management meeting that was on back in June, and
Correct.
he was talking about the product innovation and whatnot. And something interesting he was talking about is like when you choose PayPal, like it can automatically import all kind of your information just very easily, regardless of kind of what website you're on and those sorts of things. And actually, I experienced this on. I bought a pair of shoes on Foot Locker about 2 weeks ago, and it had options. And usually I just pay with credit card, but I didn't even have my credit card with me at the time. And I was like, I go to the room, my wife's sleeping, and then it had an option for PayPal, and I was like, oh, easy. I hit the PayPal button or whatever. It automatically had all my data in there. Did the Face ID real quick, boom, and it was like that. And I'm like, oh man, that was easy. And that's just a thing of beauty. And that convenience is massive at the
Yeah.
end of the day when it comes to running transactions. The more convenient you are, the more money you're going to make as a retailer. Amazon knows this. Amazon's made it so easy for people to, if you got Amazon app, you got Amazon Prime, you can order something in 5-10 seconds and boom, and then it's at your door within 48 hours, if not 24 hours now. That's magical, right?
Yeah.
And so PayPal is just able to help all these other retailers, and most transactions aren't done through Amazon, right? So, but they don't have any sort of like payment system, and so it's just so great that PayPal's there to kind of be that middleman that can just make it happen, and it's just a seamless experience, and people are just happy with it. So,
Well, let's stay on Amazon for a quick second. They have been so choosy about which payment processors that they will allow on Amazon. Extremely defensive with what they'll allow on that platform. Like from what I know, they don't even allow PayPal, but they allow Venmo, right?
yeah,
And that was a huge play for the stock whenever Venmo was actually allowed to shop on Amazon, and it's part of the actual transaction rate. I think Venmo takes like less than 2%. It's extremely competitive,
yeah,
um, and the reason why I just wanted to add to the transaction margin take rate is that the reason why it's going down is not because any of any of PayPal's businesses are going down. It's just that Venmo is outgrowing the branded checkout so much and has a lower take rate that it's dragging the whole business down. But it's in
yeah,
terms of total payment volume, it's just going up.
yeah.
you know?
Exactly, and that Wall Street obsesses way too much about just margins, in my opinion. And I think it also some of it's algorithm based trading, where it looks at like, oh, this margin went down, it's bad, sell the
Sure.
stock. At the end of the day, is PayPal's net income going up considerably over the next 2, 3, 4, 5, 6, 10 years? As long
Yeah.
as it is, like the company is going to command a bigger and bigger valuation, regardless of if some margin came from more of the Venmo side and Braintree side or more of the PayPal side. At the end of the day, watch the net income over the next few years. If that baby's going to go up, the stock price is going up. It's not a complicated game. So, short term, they freak out over all this stuff. And then, long term, you can kind of view it the way you view it.
So let me, because I'd love to ask you a question about this while we're still on PayPal. because this is obviously one of the big things that they're working on is buy now, pay later. I wonder if I can get it. So then, anyway, regardless, over 32 million users have signed up for PayPal's buy now, pay later. This is only in the 7 core countries that they're currently servicing out of the 200 plus markets that they're actually able to go after. Like I said, I'm in Canada. I don't think of myself as a small market, but we don't even have buy now, pay later for PayPal. A lot of PayPal services we don't have up here, like even the PayPal debit card and stuff. We don't have that up here. There's
Yeah,
so much room to grow.
100%. Yeah, no, that's a great point. And it's interesting with buy now, pay later, because when it first started, you started to hear a lot about it. Probably about 2 years ago, I feel like it really started to show up on the scene. People started talking more about it in the finance related community, the stock market community, and whatnot. And what is this? And at first, it's kind of seen as scary. It's like, oh gosh, people are doing buy now, pay later. Oh, this is going to be a disaster. I wonder what people thought when credit cards first started, right?
Sure.
And it was like, wow, when credit cards first started taking off many, many decades ago now at this point in time, right? I'm sure they probably thought the same thing we think about buy now, pay later. Is like, oh my gosh, that's a huge risk. Are people actually going to pay back the money? Because when credit cards first came around, I'm sure people were like, wait, you're going to invest, or you're not going to invest. You're going to buy something with money you don't even have, or that you're not paying for it right there with cash. Like, that's crazy. And I'm sure that's, the way they thought back then. I'm sure, that's obviously the way a lot of folks think now. But at the end of the day, is buy now, later massively bigger in 10, 20 years from now than it is today? Probably. And I know they were speaking about some of the innovation they're doing on that buy now, pay later side,
Yeah.
such as, making it so you know what you can basically buy for on buy now, pay later
Yeah.
before you go to make the transaction, which is important because we all know our credit card limits, or should know your credit card limit, right? Maybe you have $1,000 or 5,000 or 10,000 or whatever. It would be nice if going in, like, oh, I could do this much on buy now, pay later,
Right.
$500, 1,000, or whatever the number is.
Yeah. No, exactly. And like even what they showed off in this slide in this presentation, even though Afterpay, Klarna, Affirm were some of the original players, now that people actually have access to those things, the majority of people, the high majority, prefer to use PayPal, right? And like I don't know if you look at or if you
Hold on,
like
hold on.
NPS
Can you
scores.
scroll down for just a moment, back down to that last slide real quick here before we
This one?
go on? Yeah, we had an even higher share at 50% of the $125,000 income cohort. That's I like that. I like
Yeah.
that. Go ahead.
No, seriously. I mean, if you add up the what do you call it? The percentages for Afterpay, Klarna, and Affirm, it's also 43%. So if you take the next 3 highest, it equals what PayPal offers in terms of the percentage of which they're, people will actually choose
Yeah.
them. And then not only that, like you said, the higher cohorts are even higher.
Yeah,
But think
Affirm.
about that. Like
Yeah.
these large payment processors or payment providers can offer a 0% APY buy now, pay later. I remember using buy now, pay later through Amazon one time. I think it was through Affirm. And one of the parts that I hated is that the receipt that I got said that I purchased, this laptop or whatever, just, in one big lump sum. And then they would randomly take money out of my account over the long term, right? Now
Mm,
with PayPal, and I don't think that they've innovated on this, but it's the new standard with buy now, pay later, are these smart receipts where it tells you, no, you paid this at this time, and this will be
mm,
the full payout, right? It'll let
okay.
you know, you get the push notifications to your phone. And they can offer a way better rate than Affirm because they're literally the payment providers. So, like, how do you compete with that if you're the original Afterpays or Affirms or anything like this?
That's
Like,
true. And if I recall, by the way, Afterpay, they did get acquired by Block a while back,
yeah,
right? Okay. Yeah, and by the way, Affirm, I think, is a buyout candidate over time. I don't know who buy. I don't know if it's like a Chase buys them out, or maybe it's an Amazon, or I don't know. We'll see what happens with that. But that company, I just look at it, I'm like, it feels like a a buyout at some point in time, because I think
well,
I think they're not going to have the major scale that you really need to kind of become a big giant company by themselves. That's my opinion. So
you know what's funny? What I like to think about whenever I think about a firm competing with PayPal. If you remember, the CEO of a firm is Max Levchin. Does that name ring a bell?
no.
He founded PayPal.
Oh,
Max,
he was one of the founders?
he was the original founder. He brought on
Really?
Elon Musk, and he brought on David Sachs, and he brought on all these people. He was the original person. Yeah,
Wow.
they
Yeah, 'cause
they they were in the same building as X.com whenever X.com was competing, and then they merged two companies together, and that created the PayPal mafia.
that's crazy. Yeah, because I mean, obviously, over time they just call it the PayPal mafia, and so you just think of it as multiple guys. You don't think about it as like one guy. You think
Yeah.
about it as Elon and the whole squad and what that built into over time. Wow, that's incredible.
So it's funny to know that they're competing now, and it's like you're fighting your own your own masterpiece that you created so long ago.
Wow,
You know?
that's incredible. Yeah,
Yeah.
wow, that's epic. Yeah,
um, so obviously, we could keep going on PayPal. I'm interested to know if you want to pivot to some SoFi.
yeah. No, that sounds good.
Um, I know that you've done small or you've looked into the company. I know people have tried to pitch it before, but I do a lot of deep diving into PayPal. So I'm going to take this at a different angle. How much do you know about the company? Like, when's the last time you took a look at their numbers or what?
Yeah, SoFi, quite often. I probably even saw their last quarter numbers, probably the previous quarter numbers. I listened to the last two conference calls, and so one of the reasons I've been so tied up into it is like it's the number one stock. Like people in my private stock group, it's a number one stock. They ask me about, and hey, you ever going to buy SoFi? And that people try to pitch me on. People always try to pitch me on different stocks, and SoFi's been the most kind of pitch stock, I feel like, in the whole
Sure.
entire stock market. And so I've been looking at it. Even a gentleman that is a big Palantir shareholder, Amit, that some people might watch. Amit even.
I do the SoFi weekly with them every week. So most of
Ah,
yeah,
okay. You
I'm
know
I'm
Amit.
part of the group.
Sweet. Okay, I didn't realize that. That is awesome. So yeah, he obviously even came to my house and tried to, I think, pitch me SoFi one
Yeah,
time.
yeah,
Yeah, so that's why I've been so caught up into it, because I've learned over time you've got to take the retail community pretty serious. Um, if there's a lot of people kind of researching it, and there's kind of a consensus about an exciting opportunity, and this goes all the way back to AMD stock, because I saw this with AMD stock, a really strong retail community. This is back in, like, we're talking, this is like 2016, 2017. And I did a couple videos in AMD, and I couldn't quite see it all the way with AMD. And there's just a lot of people that tried to, talk me into it, and there was even some people offended because I wasn't like super bullish on the company. I was kind of
yeah.
like, just neutral. But and so that kind of opened up my eyes of like, wow, pay attention to this, because sometimes if there's a lot of people in retail that understand a stock very well, it might be something there. And so that's why I've been kind of keeping an eye on SoFi. Today, Anthony Noto was on CNBC. I made sure I watched that. I was actually very impressed with him. He made a lot of good points.
Yeah.
But the company's been unprofitable, obviously. Um, I got bit by several unprofitable stocks last year.
Yeah.
And so I'm probably more risk adverse than in the past. And so I'm kind of looking at it, I'm like, when are they going to be profitable? The student loan thing bothers me, of like still trying to figure out clarity there. Obviously, the White House is trying to do certain things and get certain things through. And I'm just like, what's going to happen there? So I don't know. So that's been with me and SoFi. And also I've been trying to figure out, like, are they a bank? Should they be valued like a bank? Anthony Noto says, no, we shouldn't. We don't have branches. We don't have all these physical locations like traditional banks have, and this and that. But the more you look into their business model, like, a lot of these are banking related products. So, anyways, I've gone down the rabbit hole. I just haven't been able to be convinced enough to
Yeah.
actually buy shares and say, you know what? Yes, this is the next big stock that has huge potential in the next 5-10 years. So,
So, um, so first off, it's so funny that Amit, because I remember seeing the video that Amit coming to your house and you guys sitting down. I didn't remember what you guys had spoke about, but I was the original person that pitched Amit that stock. So you can
oh,
go back, yeah, like 18 months ago or whatever, with me with my iPad camera pitching him that stock. I was a big fan. Now I haven't even been in this stock that long, in terms, like, I'm not an IPOE kind of guy where I got in during that time. There was a lot of people that got caught up in that. I started buying around the $14 ranges and then all the way down. And Now my average is about $7 a share.
Okay.
But that being said, I only like to add sort of under that range right now. I do think it's a little hot right now just because of the market that we're in. So
By the way, the stock, what is it trading at right now? 9?
I think it's 9 right now just because we've had a pretty good last couple of days.
Okay.
Like today was crazy. Yeah, $9.16 right now for SoFi. Now, the way I like to look at this bank is we have to understand originally that they are a nationally chartered bank, okay, in the United States. That's
Okay,
the,
that's interesting the way you put that right off the bat. You say the way we got to look at this bank. So okay, so
it's a
now I see
bank.
where
It's
we're
a
going. Okay,
bank,
okay,
okay? How you want to value it? I value it as a tech company, but they do actually have a nationally chartered bank license, so they get the same rates that the J.P. Morgans and the Bank of Americas do. Okay, and that's very very good because I don't even really like to whenever I pitch the stock, which is often, I don't even really like to talk about the technology company. I just like to talk about the bank, let you see how amazing that is, and then I bring in the technology company and say, hey, Jeremy, you know what? We get all this for free as well because I believe that the valuation just on the lending and financial services platform is good enough alone. And then they also, okay, let me go back. Let me go to bases. There's 3 segments of this company. Okay. There's the financial services platform, which is like a deposit account, a credit card, debit card, all those sorts of things, right? Or SoFi Invest as well, like a brokerage. They use payment for order flow, similarly to Robinhood. Then they have their lending, which is primarily
by the way, just real quick here, savings accounts, they're usually one of the highest in terms of what they offer for savings accounts.
I think
So
it's 4.4%.
yeah,
But that's part of their moat in my opinion because there are some other players like M1 that can offer 5%, but I guarantee you they are making if any profit on that extremely extremely small.
mhm.
SoFi, because they're a nationally chartered bank, they don't have to like M1 is not a bank. They have to partner with an actual bank to get that rate. And so part of partnering with that bank's not doing it for free. They want their cut as well. So right off the top, if SoFi was to offer 5% and M1 was going to offer 5%, SoFi is already going to be that much more profitable in order to be able to offer that rate because they don't need to pay another company a fee.
Mhm.
Then you start looking into the really nitty gritties of this company, like like the idea of they're their own sponsoring bank, so all their deposits can help deal with their loans. Like I was saying, personal loans, student loans, home loans. They're doing all that for the longest time. For the last couple of years, what brought this stock down was the idea that student loans went away, which was their biggest revenue driver for the longest time. They were originally a student loan company. Okay, that entire business went away. So
Yeah.
they had to pivot over to another business, which was the financial services. So
Mhm.
in the course of COVID, they came out with deposit accounts, credit cards, all these like a dozen plus products, which no other digital bank can offer. Well, not that they can't, but that they don't.
Yep.
There's none that offer lending, credit cards, investing, all these things. And Anthony Noto says this all the time. They all say they're going to, and none of them have so far. It's been 5 years. So the reason why I like this, and you said you hate unprofitable companies. On a GAAP basis, they are unprofitable. Okay, but the large majority of where their money's actually going is stuff like stock-based compensation and depreciation and amortization. So they're not actually cash burning. They are actually growing in terms of their cash basis, and they are actually growing, in terms of profitability for the business. But it's just a matter of their stock-based compensation got a little out of whack, but it is
Mhm.
coming down.
Okay.
Um, I wonder if I can bring up because I keep some pretty strong spreadsheets on these companies.
So maybe a little bit like a Palantir in the respect of like SBC got a little out of hand, and now it's not going to be as much of an issue
Yeah.
kind of moving forward.
Yeah. So sorry, you can already see it on my face right here, but it's going to be a little bit of a flashbang. Sorry. Um, but this is stock-based compensation in this disgusting purple. Um, at Q2 of 2022, it was at its highest at 22% of revenue. Here, wait, let me see if I can make that even bigger for you. 22% of revenue, whereas now it's only about 13% of revenue. And they want to, by 2024, get that into single digits.
Okay.
Um, And as you can see, as a total percent or absolute terms, stock-based compensation has been going down. Now, the good things, like you can see, their lending platform is growing over time. Financial services is growing. They're growing in all their areas, aside from technology platform. But literally, this big jump or this big drop off in financial services, which I should even explain. Like, do you know the Galileo platform and what they offer?
I don't know it in depth. And by the way, was that all your own charts and stuff there? Was that
Yeah.
imported from? Oh, nice.
Yeah.
Okay, that was
I
impressive.
I do this for all my stocks, so I have it for PayPal. Whenever we jump into the members only side, Nubank is going to be a fun one because my
Okay.
charts on Nubank I just updated for this call,
Oh,
so I worked a little extra on those. So,
okay. Yeah, no,
um,
it was nice. Go ahead. You were
but
talking about Galileo, the product?
yeah, so Galileo is a payment processing service. They do the payment processing for PayPal, or not PayPal, sorry, Robinhood. So Robinhood, the cash cards are done by PayPal, or sorry, done by SoFi.
Okay.
Okay. Chime, if you know that business,
Yep.
I think they have about 16 million users. All those are Galileo's clients.
Okay.
Okay. Um, so there's a couple, or I think they have about 20 or so businesses, but overall 100 plus million users that are a part of Galileo. And every single time that they tap their cards or make those payments, it goes through Galileo Technologies.
Did they acquire that business?
They acquired that business.
Okay.
So they bought that business to vertically integrate their own debit processing because they just wanted to save fees. And then they did the same
Okay.
thing with another business called Technisys, where they acquired this company once again. This was back in 2022. And they said, this company is a cloud native. They build banking technology, but all under one core. So traditionally, and this is the way all the legacy banks do it today, and credit unions, community banks, they all do it this way. They have their deposit accounts in one section, and then with a completely different provider, they have all their investment providers, then their credit card providers, then their, normal payment solutions or lending processes, multiple cores. So you have to pay a fee to that company, to that company, to that company, to that, you know what I mean? Technisys, and they're not the only player. There's like quite a few players in this space, like any other place. But they make a one core for all those processes, completely cloud native. Okay, so everything's on the cloud, saves a lot of fees, and makes innovating on products very quickly. Like, for example, through traditional legacy means, it might take 3 months to push out a new program or product. For Technisys, you literally go to the computer and say, hey, we're updating our APYs on our loans to 3% and enter, and it's done. So it's all completely done at light speed. They acquired that company as well. Then they went back to companies like Robinhood and they said, hey, we're dealing with your payment processing. We want to help you with your cloud native solutions to build your investment, your investing brokerage, and we'll be the supporting bank for you to actually store your assets under custody with us as SoFi the bank. There's only one company in the world that does all three of those in one, and their name is SoFi, right? So that's that perfect triangle of you come to us and like Lego blocks, we'll build your fintech. We'll build the UX, UI for all this stuff. We'll help you with the payment processing, and we'll be the sponsoring bank. There's not another company.
Wow. Now, when did they buy the Galileo business? Was that 21 or was that before?
That's 2020. And then,
so it must have been a pretty hefty valuation for that back then.
Yeah, I think they bought that company for 1.2 billion, and I think today they're bringing in about 70 or so million dollars. So yeah, it was a hefty valuation. Technisys as well, quite heavy. And then they just acquired another company that deals in all their mortgages, which is called Wyndham Capital, which they got at a very good valuation. So yeah, but essentially what I like about the business is it's being valued, at least whenever I was really promoting it, at like the $4 ranges. It was less than book value for a company that was growing 40% compounded annual growth rates plus, They are more vertically integrated than potentially any business I've ever looked at. They like, you know how hard it is to find a bank, especially, or really any business that does all their own payment processing, manages their own deposits, okay, uh, issues their own cards, like actually just sending out their own cards to their customers. Most banks don't do that. They'll give it to another smaller bank to do. Uh, it's kind of cool to see all of that all in one, and then also offering it out to other people,
Yeah.
other fintechs. But
So
yeah,
if you were to compare them against, let's say, a JP Morgan, like JP Morgan has a lot of in-house products and in different ways of
sure.
attracting clients and getting clients. So how where would you say a weakness is for something like a JPM versus somebody like a SoFi?
So so the way that I'd like to even say, because this is the biggest thing with what people say, well, you know, if if SoFi was gaining all these deposits and people were leaving and everything, and JP Morgan was pushed to the edge, wouldn't they just also compete on rates like 4.4% APYs for savings accounts, stuff like this? Like, can't they do what SoFi is doing? And the way that I think about it, you tell me if I'm wrong in this, like, please, like, shut me down if you don't agree with me. I'm fine. Okay. Um, they have massive payout ratios to pay those dividends to shareholders. Okay.
Mhm.
Similarly to theses that I saw from you with Tesla, it's very hard for these old automakers to shift over and do what Tesla's doing whenever they have all these liabilities to paying out to shareholders. It means that a lot of their capital is tied up. And I believe that JPM is very tied up with shareholder liabilities and also the idea that they have so many branches, right? They have
Mhm.
all these extra expenses that SoFi doesn't. Now you could say, but they also have trillions of dollars. you
Yeah.
know, but that's why I love finance so much, is that if you have $100 billion and you want to pay out 1% to help your customers on that, it's the same as $100,000 paying 1%.
Yeah.
The liability is the same. So the size of companies doesn't matter. It's all about the percentage in which you're profitable. And you can say SoFi is not profitable yet, but I think that won't be. I think in 4 months that'll be a different story.
Yeah. No, that's good. And JP Morgan, I think, is the toughest comp. Like, if you're going to look at traditional finance, I think JPM's the toughest comp
Sure.
for SoFi. I think it's much easier to comp against a Wells Fargo, a Bank of America, and as you kind of go down that tier list, because I think JPM's, and I own that in my dividends only account. I think that's always like the premier of like the traditional banks. So,
Yeah.
you know, what are we talking about for earnings per share? Kind of, I don't know if you have any projections for earnings per share, let's say like 3 years out for SoFi.
Um, I I don't really, to be honest.
Okay.
Just because it could change so drastically. The way that I'm looking at it, and let's talk Wells Fargo, because there was recently a article that was just done on this. Um, Wells Fargo in 2020 made up for 8% of the new accounts that that were created in America for checking accounts. Okay, 8%. SoFi made up 1%. Now in 2023, different story. Wells Fargo made up 3.5% of the new checking accounts created in 2023. SoFi, 4.1%. SoFi
Wow.
created more accounts in 2023 uh, than a traditional legacy bank that's valued like over $100 billion. And and so if I can bring up, I'll try to find this article for you. Um, the mass amount of people I think are going to fintech because the solutions are much easier. They offer better, better rates and easier customer, what do you call it? Customer support.
Yeah.
But I don't believe that the fintechs that don't have bank charters, which there's only one other neobank, meaning digital bank, that has a nationally chartered bank, and that's Vero. Okay. So SoFi is a one of two practically. And then whenever you're talking about the traditional banks that also have online banking and stuff like this, they don't offer the things that clients actually want. They still charge for checking accounts. They still charge for overdraft fees and these sorts of things. And I believe over time, as the customer gets smarter and smarter, that they're not going to want to bank with them as they trust these banks. And you should trust SoFi because they have the same protections that a JP Morgan does through a nationally chartered bank license.
Yeah.
They got a better license in banking than Goldman Sachs.
Wow. Yeah, I think one of the brilliant parts of having branches and all those physical locations is it gives you at least the illusion of like safety and security and the bank
Yeah.
vault and my money's safe in there, and also the history of being around a long time and those sorts of things. So yeah, so the hard thing for me with SoFi, it's exciting about customer acquisition and then getting your customer to use multiple products. And I know Noto was talking about that today, and all those sorts of things. And being such a forward-looking company, it's just like I have to feel confident about where I think, and I might not be right, but I have to be confident about where I think net income's going over the next few years, earnings per share.
Yeah.
And so like even Tesla back in the day, I bought that when it was an unprofitable company, but I had confidence in what I thought was going to be Tesla's net incomes in future years. And obviously they blew that away. They blew away all my expectations. But
Yeah.
I need to get there with SoFi before I can actually buy the stock. I need to be like, here's what I think their earnings per share is, or their net income is 2 years from now, 3 years from now, 4 years from now. And I'm paying XYZ market cap for it today. And that's a steal deal based upon what I think they're earning 3 years out, 5 years out. So that's that last kind of bit I need to conquer here for me to say, you know what, let me finish out going down the SoFi rabbit hole and let's go ahead and make a move.
Yeah. I mean, like right now, whenever they're not profitable, it's really hard for me to get any sort of future predictions on what their price to earnings will be. And that is hard. But the thing that I like to think about is just like they have similar processes and similar, like their loan portfolio, like you saw on the CNBC thing today, they're rooting for 30% return on equities. This is big bank numbers,
Yeah.
And whenever a bank can hold up those types of rates and their price to book, which is really my preferred, like I'm not saying this is right, but the way that I like to value a true bank is by their price to book ratio, and their price to book is extremely low. It's much higher since growing 100% this year. Like I was promoting this stock much more as being a place where I was really putting a lot of my money whenever it was in like the $4 ranges. That was a steal in my opinion, but it's doubled since then. But yeah, you're 100% right into think that like their profitability is not certain.
Yeah.
But yeah, I don't know.
No,
I think.
yeah,
Sorry, go ahead.
it's a very exciting, I think, stock, and it seems like it definitely has a bright future. It's just like trying to figure out that last bit of like, am I getting the stock for actually a steal deal? Am I paying an overvalued valuation for it? And kind of that's the part to kind of figure out. So that's where I'm gonna have to kind of go down the rabbit hole,
Sure.
in this last bit and try to figure out and try to run some projections. It's more difficult, I feel like, with sometimes these financials because their businesses are all over the place. They have so many different products, and the margins for those products can be very different. How those products perform in different environments can change everything dramatically. Like, for instance, I guarantee you, SoFi's attracted a lot of people over the past 6 to 9 months to create accounts for the savings account. Even people that are customers of Wells Fargo, JP Morgan, Bank of America, whoever, that are just looking at it and they're like, oh, a friend or a family member, or maybe they saw on the internet or whatever, wow, I get 4-something% for just keeping money in a savings account there. My bank's not giving me anything. I'm going to create an account with SoFi. What happens when that goes away at some point, maybe it's a year from now to whenever. And let's say, what you can get a savings account at SoFi is roughly around the same that a JP Morgan does that. So these are all like the different scenarios I kind of got to think about and kind of run projections on and figure out, all those different cases.
But that's the thing that I think is, I don't think they'll ever be similar to JP Morgan. So what I think is so funny about JP Morgan is that whenever interest rates go up and their take rate versus, okay, so there's a rate that we can get from the Federal Reserve. They set that. Any personal loan, any type of loan is always going to be higher. And that's sort of the bank's take rate, right?
Yep.
But then you can also find different sources of funding, which the big banks all use deposits, right? They use their own customer deposits to fund their loans.
Mhm.
Now, whenever these rates have come up, if JP Morgan has gotten extremely greedy by keeping their deposit rates at the same level, but charging more for their loans.
Yep.
So, but the problem is that SoFi, what they've realized is that if they offer 4.4% right now, they're actually getting so much. Like I think SoFi's personal loans right now average about a 13% like a APR, like an interest rate that they take on. There's about a 4% default rate for those unsecured personal loans, and then they pay about 4% for their savings account. Okay. So you're talking about a margin of about 5% or 5 to 6% really for them holding those loans. As that as the rates fall, even to zero, SoFi is still seeing a 6% margin. They could still hold their savings accounts at 4% and just accept a 2% uh, on their personal loans. Like that's the one thing that Anthony Noto has said so many times on their earnings calls is that even as interest rates go down, their savings account can stay up at the 4.4% like it is right now without having to go down, and they will outsurvive any of the other players. So I don't actually think they have to bring down their savings account. I mean, maybe to 2% or whatever if it goes down to zero, but it won't be
Yeah.
anywhere near the traditional banks.
Wow. No, that's fascinating. I love hearing that. And one thing, just kind of finish thoughts around kind of SoFi here. One thing that I found really fascinating, and this was probably either 2 quarters ago or 3 quarters ago. I was listening to a conference call, and if I recall, it was a lady speaking. I'm not sure if their CFO is a woman, or I think it was a woman speaking, and they were talking about essentially SoFi's customer base, and I was shocked by the income brackets
Yeah.
these folks had, the credit scores, because when you think about kind of a newer fintech, sometimes you think about it as younger people, they don't have as much money, they don't have as good of credit scores and those sorts of things. And I was really impressed with that. You almost like you kind of feel like Robin Hood bunch, right? And
Yeah.
I was
Yeah.
like, I was really impressed. And so that was one thing where I was like, okay, they actually are attracting a pretty good customer base here that is
Average
much better
incomes of
than I thought.
around 160 to 170,000.
Yeah, it's pretty
Yeah.
shocked. I was like,
Yeah.
wow, they're talking about their average credit scores, and I was like, whoa. I was like, okay, that's one of the things that got me more intrigued in the stock. Still not enough to get me to buy it, but that was one
Sure.
thing that I was like, that's impressive. So
Well, yeah. So even to go on that, like even whenever they opened up their savings rate, you think that that customer would change. Like anyone can come and sign up for SoFi, and but that's not actually what they saw. By offering this 4.4% savings rate, they really were attracting a very affluent customer, people that actually care about that sort of thing. So
yeah,
what they realize is that the people that are going to SoFi Money, which is their deposit account, is still getting around or still has a FICO score of around 750, which cross sells perfectly into their lending platform, which is like they only do 750 plus really for their lending. So, um, yeah, quite interesting. Like it's a more affluent type of customer base, but obviously there's so much more to go on SoFi, and we could touch on every little thing. But I would love to pivot and go on to our members conversation, where I'm going to pitch you on maybe even a more fun stock of Nubank. Ladies and gentlemen, thank you so much. Please check out Jeremy. I got all his links down in the description. Jeremy, thank you so much for coming on. I really appreciate it. I've been watching you for a very long time. Yeah. And if you guys want to see, oh, sorry, I'll just really quick.
I was gonna say I appreciate it. Thanks for having me, man. It's been tremendous. So
Perfect. If you guys want to see it, just down below, you guys can join the membership just directly on YouTube. The links are in the description. Thank you.